Adam. See, I don't think you recorded the
GM.
very beginning of that where people could hear you back there getting down. I heard it. I was on
Oh,
first one tier. He's
he's
getting it.
recording it. He's in it. He's in there. And down. I heard it in the background, bro. You gotta hear the pitch of the voice change.
Fuck, you guys heard that. I thought I was mute.
What?
You should consider being a DJ or yeah.
I think you need to turn up the volume on yours so we can hear you in the background, like one of those background singers.
Yeah, it's good. It's Monday. Fuck, I'm excited, dude. We're having the entire crypto market just crashing in front of us, but we're here. And I don't know. I took the weekend off. The pod. We got some good projects joining us this week as well. I know Crypto Plan are you with us? Yes, coming on this day. Gonna get into more beers. We got some other projects coming Tuesday, Wednesday, Friday as always. H bar. But today, let's talk some what's happening in the market. It has been intense weekend. Hence, we don't have any project with us today. Want to discuss this? Just know what's happening. I've been doing some digging as well. And let's dive into this. But how you doing, guys? TK, how you doing?
Yeah, man. It was a long, wild weekend. Keep getting invaded on my Twitter Spaces. I'll tell you a little bit more about that in a little bit. How was your weekend?
It was good. It was intense, but it was good. It was good. GDR, how you doing?
I have a Monday off, so I'll be spending the pod with you fine gentlemen. I have my cafe con leche today that I will be sipping, enjoying the nice narration of our market today. So
You have
It'll
such
be
a
a
nice
narration,
haircut.
all right.
and I have a new sound effect for my entrance. It will be this from now on.
Nice.
Yes, I have one as well, but I'm not gonna play it here. But I'll do it later. Cesty, what's up?
Unless he doesn't want to talk to us.
Yo, my bad, fam. My bad. I don't know if my voice cancellation is going to quiet everything else happening in the background, but GM, all the love the pod. I've got a disaster over here.
It's fine. I can hear all the kids in the background.
One of his 13 kids is having a disaster.
Odie and Peter, how you doing?
Good, how are you, man? Everyone else?
Great.
First, I need to ask. I see you guys keep rocking some of you guys have been paying this Twitter subscription, right? TK, and I see Toasty as well. I don't actually know what it does apart from looking really cool. Like you look really serious rocking this verification. So what do I actually, in your experience, what do I actually when I buy this?
You can't get it anymore. You've missed that window, sir. So thank you.
What?
They realized that making it just a paid check mark is defeating the purpose of the check mark is to be verified. So yeah, they realized that people were starting to pay for verified accounts and hacking and stealing money and stealing stuff from people. So they decided to quickly shut it down temporarily.
Temporarily. Okay, so when this comes back, then what's the benefit? Like, what do I get? You guys know this?
Nothing anymore.
They haven't said. Probably they're gonna change it again to something that works, hopefully.
Because before it was, are you verified? Like you're a verified person, you're a real person, because of through another person that out there. So you met this person is verified, then you're verified, kind of thing. So it's kind of like a connection. Now you can pay for it. There's no really verification. It's like catfishing. Everyone can catfish everyone.
Like a lot of haters on my blue check mark. That's what I'm getting from this conversation.
It's a white check mark, but hey, we're just gonna,
Hey, it's a blue check mark on my screen. Is that white on your screen?
Yep.
It's white. But like, okay, apart from the like in your experience, TK, like what did you get?
He definitely doesn't get any respect. I can tell you that.
Right. That shit's whack. You get the Flexagon, so you don't have to be a circle. I can edit my tweets. I can undo my tweets. You know how I get the little good morning or dear diary thing? I get that. If you're on Twitter, a lot of them end it. Like for real. Like as much as we spend on here. Um, I don't know if they'll come back with the blue check mark though. I don't foresee that. That caused quite some chaos with some
I feel
major
like such a
companies.
fucking dumbass not getting it.
Oh well, it happens to the best of us. So some of us snooze and some of us make moves.
No, because I see some influencers I know that, had 5,000 followers last week. Now they have 6,000. Here I am fucking grinding for my shit. Numbers hardly moving. Like, fuck that.
Oh, bro, pay to play, baby, pay to play. How are you, Stallion?
Doing
You've
great,
been
bro.
quite busy.
Doing great. Holy fuck. From the morning and
For
moment
those
I
that
wake up,
don't
it's
know,
calls and shit. Go ahead.
I was going to say Stallion is the voice of H bar. That's what I found out in his spaces last night. He's going to be the man for H bar. Going to be rocking spaces. What's it called? Stallion's H bar. Did I say that
Yes.
correct?
Oh, that's right. It's Stallions H Bar and every Sunday at 9 p.m. Eastern. It's been lit. We've been getting a good turnout. It was like 50 something people live last night.
Oh, yeah, that's the one where you just dismissed the entire Euro market, right?
I'm sorry?
The one that you don't want the Euro people to come on.
Oh yeah, so it's North America, South America exclusive. We don't want any Europeans. Yeah. We've got a
USA, USA,
can't have any of
USA.
socialism on our Twitter Spaces. They've already it's just too much. Can't handle it.
Stallion, Adam, and I were talking about that this morning. I called him and told him about it. He was like, "Oh, good," because it's like 3 or 4 a.m. my time. I was like, "Oh, that's perfect. That's perfect. I like it. It really does exclude the that side of the world." So we were thinking about moving the pod to them too.
I think that might be the way.
No, I'm happy. I'm happy getting your voice on H bar because obviously, we have had you on the pod talking H bar as well. You are a big speaker for H bar, and
This honestly, it's hilarious that people have been. I know some people said that on the space last night. I'm not sure where they're getting that information from.
I'm front running the shit out of it, bro. You one of the homies, and you just launched a successful project, and you're out and about on Twitter Spaces. That's you, my dude. Run with that. Take it. I mean, you don't have a blue check mark, but that's fine.
Yeah, it honestly sucks. Like have you guys been following Mario Space?
Yes, I have.
That's been fucking wild. So basically, he's been following the whole FTX saga. I'm not sure who that guy is, who Mario is, or what his deal is, but he seems to he's following it. He's doing it. He's a good guy.
Whatever he is getting people that from every industry to come and talk on his space, which is wild. I've seen
Got Elon fucking Musk up there.
Right, from Elon to crypto lawyers to Frank was there. I mean, there's been everybody has showed up at that sea because I don't think we know all of the ramifications of what's going to happen from this, bro. I mean, this is some next level stuff.
Just a second, just replying to a text.
what do you say, TK? Should we get down to business? We have a lot to talk about today on this wonderful spaces and podcast.
Yeah, let's
Can I get the? You mind if I get the Hedera community in here? You don't have a specific. Do you have a specific project that you guys are talking to today?
Not today.
That's just kind of a weekend wrap up recap. Talking about if there's anything going on up in the week that anybody knows about. I mean, it's wide open. It's from Next to Solana, Hedera. I mean, we're here just to learn and keep moving forward with this ever evolving beast. Web3 is, or whatever we're calling this.
That's what we're gonna do.
Any updates on? Go ahead, Adam. I'm just in the process of sharing the space with some folks.
Amazing. No, as the title says, the exchange turmoil is what we're mainly going to talk about. But I'm happy to, if we can get some good discussions about other blockchains like HBAR or anything you want to address as well, Stallion. Feel free to invite
I mean,
them.
if you just put hashtag HBAR or just the word HBAR at the front of the space, it will become like a bat signal, and we'll see. This will be basically what I'm doing is I'm going into. So I'm actually in a unique position where they let me get away with this shilling stuff in all of the HBAR discords, which I'll take. Nobody's told me off yet. I think they're afraid to. I will dump on them, by the way. If you're listening to this recording and I'm a whale in your project and you don't let me shill in your Discord, I'm dumping that shit. It's going right to the fucking floor. It's going to the bottom of the ocean like the Catalina whales. They tried to talk shit. Look what happened to their floor price. That was me, motherfucker.
Talk about power.
I'm so happy we don't have a.
Holy shit! I've never heard this side of Stallion. God damn, am I bricked
I'm
up?
just playing.
I love it. I love it.
Let's get to business. So, this is what's going to happen. Apart from the HBAR. And why the fuck we have no products with us today? Because
You've got
as
me.
you have seen, yes,
I'm here to shill. Please buy Gangster's Paradise on Zeus Network, HBAR. Hashpack.app.
I love it. Unless you want to get dumped on by a gangster's paradise. But this is no longer a market to get some profits, a wife, a car, and a good life. Because this, what has been happening recently, is war. So here's what we're going to do. We're going to address some shady shit. We're going to get to the bottom of this. Clean this space, one by one. It's going to be rough, just like this market. So if you want to whine, complain about the market, this is not it. Because this is now a space for warriors, the podcast for a warrior. First, shady shit, as well. And as the title says, and what has been happening in the past week. I think we covered it a bunch of times last week, but this is the FTX thing, right? Long story short, they didn't have enough reserves for users to withdraw their money. One thing led to another, and eventually a bank run, which means people want to withdraw their funds when they don't have the funds to give out, to hand out, which shouldn't be a problem if an exchange has fulfilled the requirement of 100% reserves. But SBF, this guy, Sam Bankman-Fried, thought it was a good idea to spend the people's money, something your favorite bank is doing as well. Either way, the trust in exchange and in the overall crypto is horrible at the moment. They canceled their withdrawals, right? And filed for bankruptcy. I think this SBF guy, he got arrested this weekend, or if it was like Friday. So there's definitely a big turmoil going on there. And it's sad. I guess it's sad to see people lose money. It's sad this happened. Sorry?
I don't know if he did get arrested because somebody said he was tweeting this morning.
There
Yeah,
was
posted.
tweets coming from his Twitter account this morning.
Yeah, he said he was going to break down everything that had happened. I don't know if the authorities.
Hope you're cutting up their future, but yeah, there was a tweet that said "what," and then a couple other ones that started to spell out "happen." I don't know if that finished happening, but it's weird. I don't have any idea if it's just the timing of it is what's suspicious and how fast things are moving.
He tweeted what? Like he was gonna start a thread, and then it just ended. So I have no idea what the fuck this is about.
He's tweaking, bro. Fucking SBF he's tweaking. He's on drugs. You think he's sober right now? You think he's like not he's having a date with the bottle and amphetamines. He's having a good time. Like he's not addressing this on the Natch. Not a chance.
It's sad to see. Like honestly, we're kind of making fun of it. It's a lot of people lost a lot of money, and it's sad this happened. We're seeing like this big trust issue in the entire space. But we're also like, if we were to take some positives out, I guess this is the time to get rid of bad actors, and there's a lot of people like looking into exchanges. Hopefully, we can get rid of some bad actors in this process. What do you think, guys?
Yeah, for sure. I think the thing that's different this time, though, is this time the institutional money got wrecked. Like if you look at the 2017 bull market and subsequent crash, like it was degens that are just computer nerds for the most part that got wrecked. It wasn't really retail quite as much. If you look at the Luna crash, it was retail at that point had gotten a bit more sophisticated. Was in Luna, was in these other tokens. So you had retail get wrecked and you had a little bit of institutional money get hurt, but not so bad. This one wiped out institutions in a way that we've never seen. Think about the number of companies, the number of other exchanges, the number of projects and layer ones that had funds on FTX, funds that they could not afford to lose on FTX, their children's savings account, or their children's college fund might have been in Bitcoin, say, held on FTX for whatever reason. And they got wrecked. So we've yet to see the sheer fallout that this is going to be, but this is going to be unlike the others. And not to say that things won't come back and come back stronger, and blockchain and Bitcoin and Ethereum and HBAR, even Solana, like they're all going to have, I think, a place in the future. But it doesn't mean that it's going to take us. So it took us up until now. The sad thing as well is we were on the cusp of a breakout for Bitcoin. Things were looking bullish. All of the traders I know are starting to allocate more either to spot positions or to net longs. So right when you had people start taking money off the sidelines and putting it back in the market, then this debacle unfolds. So people, I think, that were being cautious up until recently got especially hurt with this collapse.
So I know, Stalin, you're a big also like trader in coins, right? You like to go long and go short and predict the market in different ways. Like, what's your take right now? Let's say this and the next, before the end of the year. Like, what do you think is going to play out?
Oh, this is so choppy. I've actually begun trading much less, and also, I mean, I've been with Gangster's Paradise. I don't have the time to be at let's say day trading quite as much as I was before, but I think that none of this is financial advice, and I just want to also say that I do not agree with any of the opinions of any of these people here with us on stage. They do not represent me in any way. So I just want to make that clear from the beginning. Ultimately, I think that there might be more downside. People think there's more downside, and I wouldn't necessarily say like, oh, jump in if you're going to take a long when things dip. Like things could be rough. Not the time to play with leverage. Like if you do see if you're trying to accumulate projects, like find some stuff you like. Like let's say if you could buy a Bitcoin at $15,000, for example, like where is that going to be in 10 years, or within 10 years will it be worth more than that? Who knows? But I would say most likely. I think things will bounce back, but I think we're looking at a long recovery, and the thing that hasn't had its impact but we know is coming is going to be all sorts of international multinational regulation that, let's say, outside of say my country of Canada or the United States, or so Japan was looking at international regulations or calling for it. Like this has been like there are people calling for it, and maybe these exchanges need to at least not be able to invest customer deposits, which I had no clue FTX was doing that. It's a sinister business practice, and it should be illegal.
You want to change it from the normal banking system, is what you're telling me? Because that's what they do with our money?
That's true. Yeah, that is true. But I mean, it's not money though. It's risk asset. Well, so let's say if a bank were to take your savings deposit and they'll loan it out for somebody on a house. Like sure, if housing values get wrecked, then I mean we've seen that happen actually play out in recent memory in 2008 or 2008.
What's different than doing this compared to the NASDAQ?
Well, I do think that crypto is more volatile, and especially if you're in situations where, for example, FTX was borrowing against their exchange token, and I actually don't know what the value proposition of the FTT token was at all. Like, what is it? Discounts on trading fees or something. It's usually just BS like that. but it's not like I don't think that FTX had their own layer one. I mean, they of course were very invested in Solana, which I think is ultimately love it or hate it. There are a lot of innovations that came with Solana. Like it for the longest time, it was the fastest, and I think it's a great network and it has a great community
Do you
too.
know or does anyone here know the biggest holder of Solana? Because I've been looking at the numbers, man. I am so impressed how hard Solana got hit and how their recovery and how it's stable and the buy pressure.
I think FTX was one of the biggest holders in Solana.
Yeah, I know it was
Yeah.
one of the biggest, but was it the biggest?
I'm the biggest holder. Thank you.
Oh, by the way, could we invite the Creamies account and HBar Joe up to the stage?
Feel free to come up, guys. What's up, Peter?
I think one of the underlying issues here and difference, right, maybe with the banking system is that in some way, right, like in the banking system, some of your savings are insured or protected by law. And even then, or you should know when you put your money in a bank that they are going to lend it out, right? It's known. And in this case, FTX was explicitly saying that they would not touch your assets, like they would stay in a wallet, right? So you were given the sense that you could take them out of there, no issues, anytime you wanted, and they breached that. They basically committed fraud, right? They did something that was not in the contract. So I think that was the biggest issue here. Because I think Voyager was different in that sense. They did state that they could use your funds, and that's why they got into issues when the people they lent the money to couldn't pay it back. And that was a risk. If you were investing in Voyager, you had to know that was a risk, and that was different to what people talked up when investing or putting their money in FTX. So I think that's why people is losing a lot of trust in this thing. Which is not to say, because I've had a lot of friends that are not into crypto that are saying, "Hey, so it's crypto a scam?" Crypto is not a scam. It's these people doing fraud, not abiding by the contracts and the companies they establish. Right? It's two different things.
My biggest fear here is it's going to become more centralized. That is honestly my biggest fear. But welcome, Creamies, H-Bar. H-Bar.
Thank you guys for having us up here.
Yeah, thanks for having me up.
Welcome back. H-Bar Joe, I haven't seen you on the pod. Creamies, I've seen you on the pod. Welcome back. Happy to have you.
Thank you
I
guys.
just popped in. I was a banker in a former life, and in the U.S., a lot of it basically does come down to regulation. I mean, it's what the U.S. banking system had to go through in the Great Depression with the run on banks. They had loaned all the money out, just like these exchanges, and then when everything collapsed, people went to get their money. It wasn't there, and the big argument then was, what are we going to do to regulate this? And obviously, that's why there's an FDIC guarantee behind all the money now, which wasn't increased for 30 years. And in 2008, it was increased because there was another run on the money, and the banks, before they got held up by the U.S. government and supported, they thought there was going to be another run on the money and collapse of the banks then. So from a perspective and talking to my friends that are still in banking that are also invested into crypto, it seems like a very, very early days of the U.S. banking system. So for these exchanges, I don't know about globally, but in the U.S., there's no way around having regulations, or they're not going to let people buy it with U.S. bank accounts. That's for sure.
I know a lot of these exchanges have the 100% reserve requirement for their funds. They need to be one-to-one backed by all the coins in the exchange. I think FTX had this as well, but they didn't follow it. But we're starting to see like a lot of these. I know Crypto.com is working on getting it done right now. They're proof of being 100% backed. So hopefully a lot of these exchanges go through this process. DC, Lord DC, what's up?
Yo. First time speaking on the spaces. Shout out to everyone speaking here tonight and in the audience listening. But I actually wanted to talk about what you just said about, exchanges being regulated and everything. So in essence, what you see is what SPF just did is deceptive trading practices, right? And the thing is, like Joe mentioned, about banks. The thing that differentiates it from the banks is it's not regulated, and you need more regulation to begin with if you want any sort of transparency. Because I was in another space tonight and I heard somebody talk about how this isn't any different from stocks, and yes it is. In stocks you have a KYC, a face to face rather transaction, and that's actually by law that's valid. So I'm from the legal background. I'm actually a lawyer. So, just a legal takeaway that I've seen, you need to actually really, really, really see where you're investing, because in essence, it is incorrect to assume that FTX had any proof of reserve or any one to one asset backing. It's because FTX Global was registered in the Bahamas, right? And the Bahamas have no competition law, no antitrust laws to begin with. And this is very alarming to see, because if you have no restriction upon monopolization, upon predatory pricing, basically, what the US got rid of when they got rid of the Rockefeller family, or anything, all of those families governing certain assets of infrastructure, of oil, of steel. And it's very important to see that you know when those tycoons, they crumbled from their ashes, there was growth. So you need regulation for growth, and it's very alarming to see more people push for decentralization. While I do, I'm sorry for rambling on here, but while I do understand decentralization for a consumer end is important, it is highly important to hold these central exchanges accountable, and there's no other way to go about it. But thank you for having me up here.
No, thank you, thank you. Like I'm curious to you as well, and to anyone on stage. Is there any exchanges? We're starting to see a lot of things unpack here. Is there any exchanges you guys feel you trust more than others at this point, or are you guys just getting self custody over everything at this point?
I think that Binance is probably on the safer side. Even, of course, I'm not thrilled with CZ essentially caused this cascade, but I think Binance is probably safer than most. I mean, I tend to use KuCoin, but even that one I don't necessarily view as safe. So I've recently been, withdrawing my trading bag into safer storage, and I think that's a necessary move. And I still have some funds on there, but like I keep a little bit of a trading bag on there. But I've been trading less as well, in part because of this exchange situation. I don't want to keep my full bag on a centralized exchange. Although I would say trust Binance a little bit more. Go ahead, Joe.
I think, from my perspective, I use the bank for my fiat because I have to. It's convenient. It's connected to my cards. I can immediately transfer funds to pay off anything I put on a credit card. That's why I have that. But with my crypto, I purchase and then move it. And I think, that's what all the talk's been about since all the FTX stuff. But I think an exchange, other than people that are trading regularly, which is high risk anyway, for just a general consumer and user, I don't think a chain is as valuable as a bank is anyway. So if the purchase can happen and the tokens can be moved quickly and safely, which some can't right now, but in general, when COMCs are here, I think that's part of the key. So yes, I have Binance US because it's harder for us to get anything here, but I still wouldn't leave more than just a fraction for trading there because I don't need to, because I have access to it in my own wallet. Basically, a safe at my house as opposed to somebody else's safe.
Just to chime in here, if I can, and give some, some legal shout to the audience if you want.
Yes,
But
please.
but yeah, but honestly, the exchange that I would trust the most is Coinbase, and it's okay. So I'll be honest, I'm from Pakistan, right, and I really don't, I don't adhere to any crypto laws in general. So, but
This
if
is
you're
parody,
using
and he does not mean that. Just to be clear, this is parody. But go on with that expectation.
I'm actually being serious. But if I were to trust a central exchange to begin with, I would go for Coinbase. Coinbase is centered and headquartered in the US. And being in the US, being a corporation in the US, it's have to go through the SEC's stringent regulation process, and they're in the middle of even building upon that process. And I, for one, see it as a major, leap forward, as unlike some of the influencers in today's spaces. I think regulation is the way forward, in at least in terms of these central exchanges. So yeah, that's just what I want to say.
I actually do agree with that. The exchanges, I guess the fiat on ramps, perhaps maybe those need regulation, but maybe not with the exclusion. As long as they're not going to try to regulate away my ability to do a peer-to-peer transaction, then I think that's important. As long as I can say, give somebody Bitcoin for cash or give somebody Ether for cash, and that's not going to be like a life sentence or something. That's what we need. So I mean the nice thing about a centralized exchange is they're convenient for trading. I could definitely see regulation of the fiat on ramps as being, or just if all the regulation did was they can keep consumer deposits separate, and that's the global thing that's done. Because if that had happened, FTX wouldn't have been an issue. Uh, and that's the only step. You don't need to. This is not the time to start regulating DeFi. They're going to take that risk. They're going to take that risk anyway. It's not time to start putting devs in jail, which some of the proposals would do, and they have been. They have put some devs in jail in the past. We don't need that. Go ahead, Jack.
I've been here for some time now, and I've been listening to this. Which exchange is safe? There's 2 points that I want to make, and this is somebody else's analogy, and I'm going to use it. Use exchanges like public toilets. You go in, you do your business, you get the fuck out. That's how exchanges should be used. You don't build a house there because it's a fucking public toilet and it stinks. Nobody is safe. As much as we say that Binance is safe or Qcoin or Kraken is safe, nobody is safe. We thought last week FTX is the safest exchange out there. Look at what has happened. It's right in front of our eyes, and we don't even know what the real story is at this point. The guy's tweeting out letter after letter. What are we supposed to do? Make of that. And as far as the last thing, I want to ask a question. What does regulation look like in a DeFi world? DeFi is more transparent than your regular traditional banking system even looks at. It's more audited. What does auditing really mean? That show us the books, tell us what you say is true or not. On blockchain, every single transaction can be instantly seen on everything. So I think we talk about regulation, and a lot of people talk about regulation. What does regulation really mean? It's just a buzzword at this point, where it's shown as, or it's been touted as that somebody needs to control this thing. And we don't need to control. The control is entirely distributed. It's the failure of the CeFi, not the failure of DeFi, that has led to this moment where we are.
Yeah, I think that's spot on. And in many ways, I think that some elements of DeFi are actually safer. So let's say if you have self-custody of your coins and you go to interact with Uniswap, which you know is a safe protocol, as long as you're actually interacting with the front end you think you're supposed to interact with, that's a very safe place to transact. And if you're able to, say, go from Ethereum to, let's say, ERC20 Matic tokens or something using Uniswap, then that's actually a safer bet than using a centralized exchange. As you know, a lot of people learned the hard way recently. And I think those of us that weren't affected by this, that do have funds on an exchange, like I do trade with funds on an exchange, I acknowledge that in many ways I got lucky. That the funds that I had on exchanges weren't on the exchanges that have been compromised. And I've since taken steps to begin removing those funds in an expedited fashion as fast as the exchange will let me. But yeah, I think that's right to say that even something like a Binance or a Coinbase, how many people does it take to collude to get access to the cold storage wallets
And more
at those
importantly,
organizations?
Yesterday there was an amazing point made by the founder of Kraken in one of the spaces, and he simply said that we had a lot of FTX's accounts on Kraken, and government told us to freeze those accounts or assets, and we completely froze that. Then he also said, tomorrow government can ask us to freeze your assets. He made a
Spot
very
on.
good point there.
Spot on.
He simply said that an exchange, your assets, which are kept on the exchange, is a liability for us. So you want to trade the assets? Come bring your money, trade it, and take that away. Because the longer you keep those assets on our books, it becomes a liability for any of the exchange. And that was amazing. This is the founder of Kraken, by the way.
I mean, he's telling it like it is, man. That's honest. And that's the other risk as well. It's a risk with USDC, USDT, as well, and many other, centralized tokens, say, is unlike Ethereum, unlike Bitcoin, for example, there's no organization that could come around and take your self-custody Bitcoin from you. If you're holding it, you can, even if they blacklist your wallet, you can eventually find somebody to trade it with. Like, that is your money. And actually the major invention that was Bitcoin, and I think one of the major applications of cryptocurrency, let's say for whatever reason there was some turmoil in Canada or something and I had to flee to another country. But what happens when they close the bank accounts? They don't want money leaving the country, say, in a given situation. Not that I mean, Canada's very safe. I don't think that's going to happen. But I can hop on a plane, go anywhere in the world, and just take. I don't even need any. I don't even need my ledger. I can remember the words and put it into a new ledger or put it into another
that's the
hot
whole
wallet.
thing. You can carry billions of dollars without anybody questioning anything, just by remembering your whatever 2412 word. And if you find a way of storing that on a blockchain, you don't even have to remember that. All you have to say is, "This is my address," and you can publish that address anywhere. And then I can find out. I can help you do this in a nice way, where even your seed phrase can be stored on the blockchain. Happy days.
Get self-custody. Jack, I'm going to quote you on this. Use exchanges as public toilets. Get in, do your stuff, and get the fuck out. That's the quote of the
Honestly,
day.
that wasn't my code. I was in one of the spaces, and I don't even remember who said that. And this, I said, yeah, absolutely. Keep your
That's
trading
okay.
money and do that. There was somebody who was raising their hands quite a bit. Lord Daisy.
Yeah, DC.
The guy
Sorry,
from
DC. Did you have anything else?
Oh, thank you. I was actually in the middle. If I can catch up in just 2 minutes.
Yeah, that's okay. I hope you're not using public at this point.
I am actually using the toilet, but yeah.
Yeah, good.
I have another thing I would like to discuss in this spaces here with all of you. I listened to it's crypto.com, right? I think most of you guys read in on what happened. I listened to an AMA with the CEO this morning, and he was a true politician and didn't address this in any way, shape, or form. But what happened is that 320,000 ETH, which is like 400 million, was moved from crypto.com to gate.io, which is another exchange, which was like 80% of their ETH holdings. And the response was that this was supposed to move to a cold storage address, but was by mistake moved to Gate, and they managed to get their
Oh
funds
my
back.
fucking god!
Yeah.
So
Yes.
this highlights two simple things. Two things, and which are both bad. Either they don't have enough controls in place to even ensure that what they're depositing and what they're trying to transfer. That means it's really mismanaged. That you're moving close to about $400 million worth of assets without even having proper control or operational security or in place, that you have deposited it to the wrong stupid address. That is the best case. The worst case is something fishy is going on and we have no idea.
It just
Oh, just
sounds. Sorry, Desai, feel free.
Oh, sorry about that. But just to chime in, I actually did see this as well. And from what I saw and what I could, research, crypto.com actually has a multi-sig wallet where they require 4 to 8. I don't quote, don't quote me on this or anything, but they require somewhere between 4 to 8 signatures for any, amount transaction that's, that much. I believe it was over 10 million. Again, don't quote me on this. But it is alarming to see that even with protocols in place, and I also saw crypto.com has extensive amount of safeguards in place, and they have a really high rating in terms of security. And it's just alarming to see if they have multi sig wallets in place. It's just how did it go through? And what's even more alarming is where it was sent. Basically, there's this theory going around that Gate.io, I don't remember where whose it is acquired by, but basically they had an audit, right? And it is that they got the funds for the audit, so they returned it back in in a couple of transactions throughout the week. And if I can probably find the tweet, I'll pin it up. But
I'll pin the tweet, the crypto.com CEO's reply.
oh, yeah, 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 perfect. So they sent a couple of transactions throughout the week, and it's alarming to see, if and this is another legal chill. I'm sorry, it's just the lawyer in me talking at times, but it's alarming to see that auditors in this day and age, they're still new to the crypto game, right? It's still, it's still ongoing, so these auditors don't catch a single fucking thing. It's what we saw in FTX. SBF had a backdoor where he could, manipulate audits, and this is very alarming to see, transactions of this amount being spaced apart this much, and potentially when audits are due. And it's just you really have to understand where you're putting your money.
That's always been the case. So that's always, to that I simply say that everybody has the same view that we have to look at. The simple solution of this thing is, the way I see it, is to build an off ramp on the blockchain as well. The on ramps exist where you can instantly go into your MetaMask or deposit money through MasterCard or any of the payment gateways and payment processors that exist. But how do you take money out of the blockchain is what I think most of the people will be starting to build now. On ramps are there, just the fees needs to be lowered, and that's about it. So the solution already exists. It's just that how do you off ramp? You use exchanges because it's easier to on ramp, off ramp. That's the only thing, and then
uh,
we're all safe.
just to reply a bit, I've seen Bitcoin maxis go for self custodial wallets, right? And I'll be very honest. It's like you said, use central exchanges like a public toilet. Go in, do your shit, get out. And I agree with that. Whenever you're storing crypto, use a self custodial wallet. Uh, you know, own your crypto, own your key. as it's been said various times. But when you are using a centralized exchange, you have, I'm sorry, but you have to be very careful. But yeah, Jack, you are 100% right. We need a call for more self-custodial wallets and more, owning your crypto.
I mean, that is given. What I was trying to say is that within the blockchain itself, the only thing that is missing right now is basically taking your money indirectly into your bank account. That is what is missing. And that is what exchanges offer. You do KYC and you transfer the money. Now, there's going to be a whole lot of things, mechanisms, and needs to be in place. The problem that I see with that is that now with your bank, you can identify which wallet address is. So if we use Tornado Cash, sort of a mixer technology in between as a gateway, now you can be absolutely sure that your address remain anonymous and is not linked to your bank account. Because the government finds out that this is your address that is linked to your bank account, they can instantly freeze your assets again. So that is the problem that you see. You deposit into exchange, your exchange account can be linked, but at the same time, your address on the chain or your self-custodial wallet still remains anonymous and to a large extent. You can still track the transactions, but the government cannot do anything about it because it's completely decentralized.
I'm sorry, Zims and Adam, if I can just reply one more time. I know I'm
Yes,
just.
yes, you got this. Feel
Oh,
free.
okay. Okay. So Jack, I 100% I understand what you're saying, but I'll be honest, man. See, if you look at stocks and if you look at crypto, the only thing, differentiating crypto and stocks is where stocks are totally KYC, whether know your customer. Stocks are 100%, they're face to face. In some essence, you're doxed whenever you buy a stock, whenever you trade a stock, whenever that happens, it's by law required, right? And this is it's the basic benchmark for most countries. But going on, where you talk about, it being unregulated, you can't have it be unregulated because, like stocks, you need a level of doxing that is required. If there was total anonymity, you as a crypto buyer, let's say you purchased a bunch of Sol, right? And this is when
Sure.
I'm talking about crypto is mass adopted. I'm sorry, just one sec.
Yeah.
Crypto is mass adopted, right? Let's say you buy some crypto, and I'm talking strictly as a lawyer here, right? I'm taking all these things into account. So you buy a bunch of crypto that's stolen, all right? You being an anonymous user, you being someone that doesn't want his, you know public identity being doxed, or you being known, it's going to put your bona fide purchaser status in peril. And what a bona fide purchaser is even if you buy stolen goods, or you buy, you thought it was the new Beats by Dre, and I know it's been taken over by Apple, but you thought it was the Beats by Dre, and you got a bag of cocaine, but you won't be prosecuted. Why? Because you're a bona fide purchaser, right? And that requires a certain level of regulation on your part, and it requires a certain level of compliance by your part in order for you to be exempt of that. So it begs a more moral question. If you're in favor of more decentralization, you should be in essence, and I know it sounds fucked up because I lost a few funds in FTX as well, you should be fine with what happened to FTX, because that's what's going to happen in the future if you have zero regulation,
So here's my
100%
point.
decentralized.
Here's my point. You're saying for 2% or 1% of the cases, you want to ruin the party for the 99% of the population where this is not. And secondly, I wanted to ask this. When you talk about regulation, let's say we have one protocol running on any of the blockchain. Let's say Aave, or let's say Compound, let's say Balancer, let's say Curve. How are you going to regulate? What sort of things would you put on these protocols when every single transaction, every single token, every single wallet is out in the open? What is there to regulate? What does the meaning of regulation look like in DeFi world?
So just to explain a little, while I am, I can give my legal expertise a bit better. I do understand, Jack, that you're more in sync with the crypto world, and I will give you that 100%. But in what in what terms I see, DeFi being regulated, and in essence, stable coins being regulated as well. It's just about, I always give this example to my real life friends or whoever, but it's the United States. You have a stringent measure. You have something that you have to be one to one backed, and it's important to realize that the only reason FTX.US, their US entity, went bankrupt is because of illicit withdrawals from the Bahamian bank accounts, and otherwise they were one to one backed.
Can
It's
you tell
it's
us more
it's
about that point in particular? Could you expand on that? So what was the issue with those withdrawals?
So I don't know if you guys saw, but there were these transactions happening on the FTT blockchain where people were purchasing NFTs worth millions of dollars, right? And it was basically this Bahamian IP address that was just siphoning funds because the Bahamian government issued FTX, the corporate entity, the parent company. They issued a direct notice that above all, you issue your withdrawals to Bahamians first. So this person actually exploited that direct issuance by the government, and he was able to withdraw a lot of funds for these people and was able to even give back. I'm not sure if he gave them back or whatever, but that's all I know. And this is something that's been reported. I these are old tweets, and this is something that happened 3 to 4 days ago. I'm glad I could shed light on this actually.
I, Fair enough. Fair enough. First of all, there is no FTT blockchain. FTT is just a token, by the way. There is no FTT blockchain. And then the thing that you're talking about was done by one of the developers, but we'll find out soon enough, or we may never find out what really happened. It's all speculation at this point. Uh, who did it? Why did it? Right now, we don't even know. There are a whole lot of conspiracy theories flying around left, right, and center. But at this point, I don't know. Personally, I don't know who to trust or what exactly is going on with FTX. But my point still remains here, which I wanted to understand that how do you regulate DeFi? What two things you will regulate and how? What does that look like? Because when I look at the banking world, it's completely centralized, right? Therefore, it is required by law, US law, or the whichever is the central body that is controlling the banks of US or anybody else. It is required by law that, for example, if you have $1 worth of deposits, you can leverage or take a risk no more than $11 worth of assets. So when you deposit $1 on Bank of America can basically take leverage 11x leverage on that. That's it. Those are the regulations, and then you have to go through different audits, and the big four companies are do all the auditing systems. So yes, the assets are here. Here are market-backed securities. Here's your bonds, whatever securities that exist, and this is all controlled and managed by SEC. Only because the books needs to be shown so that you have a central governing body who is basically want your books to be transparent. If those banks effectively come onto the blockchain, America that exists on the blockchain, because everything will be transparent, there is no need to do any sort of auditing because every single asset, every single trade, every single leverage, every single collateral, every single borrowing, every single wallet will be on chain.
Uh, I'm sorry. Can I just shed some light a bit more. But yeah, you talked about banks. While I 100% agree with you, it's important to realize that banks actually have illiquid assets such as properties, such as real estate and other such big assets. So when they're one-to-one backed, you can expect these illiquid assets to actually come in fruition and provide their clients with liquidity. In FTX, and what we've noticed, it was a shitcoin essentially that was as collateral. And if you're going, if you're getting fucked, then they're gonna give you the shitcoin. But in banks, you have stringent measures in place, and you need to realize this, that banks are heavily regulated, man. It's no
Yes.
joke.
Yeah, exactly. So my argument is simply the same. In fact, I want to correct that statement. No bank owns the real estate. What happens is whatever loans that they give on the mortgage, they basically trade those securities out in the open
100%,
market.
100%.
On the contrary, they have only very, very liquid assets that they can get off the books instantly if they wanted to, on per second basis, not even hourly basis, per second basis. No bank keeps illiquid assets on their books. These are very, very liquid. So for example, if I take a mortgage from Bank of America, instantly that mortgage is put into a bond and effectively starts trading out in the open market.
Guys,
So
we're getting sorry, Desai, we're getting really deep into this conversation, and it's really interesting. I'm just listening, and you guys are amazing. We're not gonna go for so much longer, and I have one thing more I want to address. So, kind of talk about to end this with some hope. So we're gonna get into that. But first, come Patches. Welcome back to the pod. How you doing?
Doing great. Yeah, Stallion DM'd me and said I should join this pretty cool space, and sounds like I got in at the tail end. So glad I didn't miss it.
Nah, we got some time to go. We gotta continue this because this is what's needed right now. I want to know, like, from all of you guys or anyone who has any take on this, because we're in this kind of, as we said, turmoil right now, and there is a lot of people are losing trust for this space as a whole. Unfortunately. Oops, my mic broke me. What is there something like what needs to happen for us to restore the trust? Like what? Not exactly what can we do, but what needs to happen? Patches.
I think if there is one lesson that everyone can pull away from this bull run, it's don't trust centralization. Hard stop. And we relied way too much on the ease of signing up someone for FTX, and they could easily trade all these things. They don't need to understand the nuance of all the security. But then you have legislators in Canada freezing assets on centralized exchanges for political means. You have people losing entire millions of dollars, not because they made a bad trade, but because the centralized funds were in what turned into be a Ponzi scheme slash an insanely poorly run centralized exchange. And I think we as developers just accepted in this bull run that the only way to pull on people is good UX. The only way to get really good UX is custodial wallets. Not your keys, not your crypto. Everyone gets wrecked. It's like the three steps of this bull. So to me, what we need to do is have an amazing user experience that does not compromise decentralization. Decentralized DEXs execute very well. Their smart contracts are trustless. And in bringing in good user experience to onboarding users into the ecosystem through better education, through bite chunks, low cognitive load information for people that aren't technical is paramount to having decentralized systems and networks that are built on decentralization that I would argue Hedera is, where you can do a transfer, NFT transfer from two wallets natively through the network, executes royalties, and there's no risk of smart contract nefariousness. And so leaning on strengths of networks completely in the entire ecosystem, build a great UX and onboarding people that does say, if not your keys, not your crypto, understand what the seed phrase is. And that's friction. And you cannot compromise that for user experience or everyone gets wrecked. And if we do that in this bear, we really focus on infrastructure, speed, accessibility, and user experience without compromising the integrity of what crypto is supposed to be. Then in the next bull run in 2023, 2024, we'll be set up to not have this happen again. That's my take.
Very
I
good
think
take.
one of
That's
the
awesome.
biggest.
That's really awesome.
I also think one of the biggest things that we need to remember in the space is complacency will kill your wallet. That's something that we've all been. I know I've been guilty of. Everyone's been guilty of. Oh, I'll move this later. I'll send this later. Oh, I know I shouldn't have this much there. Oh, I'll send it to the ledger later. Oh, it's okay. It's on the exchange. At the end of the day, just like they said, not your keys, not your crypto, and that will not change. So I mean, don't get complacent with this.
Yeah, today don't get complacent, but I believe what Pat just said is absolutely, if you absolutely right. How about, see, people are lazy. I even had the guy yesterday tell me, you know what he said? He said, I basically wanted to buy something and FOMO into something. And while all this was going on, he deposited money on FTX so he can buy something rather than setting his password on Binance. And he laughed. He laughed at it and laughed at it. The problem is, people, you have to accept, people are inherently lazy, and you cannot change that. You cannot change that. And therefore, our systems, like Patches said, the entire experience, user experience, low cognitive load in order to transact with any DeFi protocol should be enabled. As developers, as builders, now it seems that it's more important. Let's learn from this and let's build systems around DeFi protocols or applications or layer one, layer two, whatever it is, to make sure that you can easily transact with a blockchain without much complexity that currently exists today.
I see so much opportunity when it comes to simplifying a seed phrase. Like an actual seed phrase private key generation might be complicated, but if you use biometrics and a salt key that the person knows, auto generate a seed phrase off that, like it's not as perfect, but there's methods I think in which we can still simplify the onboarding process. And I know this is actually a thing that Lehman Baird is currently working on for the Hedera network for simplification of onboarding of non-technical users into the network protocol. But it's like, it doesn't seem that crazy to be like, hey, remember this one password, but then also you need your biometrics to check off of like Google Auth or whatever um, to confirm it. And so there's like, you just use the mechanisms they're used to, which is Face ID or whatever, build in a small, easy password that allows them to still secure their own safety if someone steals their fingerprint or whatever. But I guess we didn't spend this thinking about that. It just wasn't, because we're like, oh, we'll just go to Binance, go to Coinbase, go to FTX and onboard, go to MoonPay. And so I think that's really, figuring out an onboarding process without centralization through fiat, ACH is difficult, but I think that's the next step. And then the, wallet creation without custodial means that is simplistic to a user using methods and encryption that we have today that the users used to, again, like biometrics.
And off ramps. So we use exchanges to off ramp into our banks as well. That is another thing. So that needs to be sorted out as well, just to add to that. But I totally agree with you.
I 100% agree with what Patches said, and yeah, self-custodial wallets is the way forward. And I actually love the fact that you talked about having a generative seed phrase where it's just basically 2FA enabled, where you just Google authenticated and you're good to go, and you have your crypto, and essentially there are no central exchanges. But I do want to touch upon what you said, and I 100% agree. It's, people in the US with FTX US going bankrupt. Bro, these people were, and I've mentioned this in a space before. I don't know how many of the listeners today are American and who have invested in FTX .us, because I applaud you. You've paid your taxes. You've done everything, yet you've been robbed of your money. And honestly, I am so sorry that happened, because by law that should not happen. You're going through so much and you're doing so much as a consumer already that maybe it's been misinterpreted what I'm been trying to say. I'm not calling for more regulation, Jack. I am calling for smarter regulation, where I am calling for more centralized exchange regulation, more where a corporate entity is trying to interact with an individual, they should be regulated, not the individual, because the individual has many rights, and those rights are to be protected, whereas the corporate entity, by virtue of being in business and being under stringent laws and policies to begin with, should be heavily regulated. So I'm really sorry, and you're 100% right, Patches. It
No,
is
no, no.
unfortunate to see people suffering because some company in the Bahamas went bankrupt.
So I would go a little bit further, and I would simply say, I mean, you don't have to be sorry. We're just having a discussion, and I totally 100% agree. If you exist within the CeFi world, you have to be heavily regulated. What I think the future should be that why do you need to interact with CeFi anyways? Why can't you just interact with the blockchain directly from your bank and stuff? Let's eliminate the entire exchanges because what is it that they do in really that we cannot do on the blockchain?
Dude,
That's the
I
real
think.
issue.
Oh,
If
sorry.
if we could get a wallet to just do the whole exchange for us, and then you have full control, is that possible to build?
That is sort of how Hedera works. There's an easy way to do token transactions in Wallet now on Hashpack. Use an API for Saucer Swap. It is a smart contract ported by Uniswap, but the network transaction that's being executed on the swap isn't it's atomic, and so it allows a wallet to be pretty independent from any centralized entity. It's just interacting. I guess it's typical DeFi. After I talk through it, it is just typical decentralized exchange. But what was your suggestion outside of that? Because I guess conceptually, do we not have that? It's just the user experience is a little bit clunkier.
For me personally, if you ask me, yes. So we have the on ramp, which basically charges more money, more transaction fee when you compare it to exchange. So a lot of people think that it's easier to buy ETH or Bitcoin or let's say Solana on a Binance because my transaction fee is so low. So I would rather go there rather than buying directly through MetaMask, which charges about 2 to 3%, and then have a higher. They're making their own margins, and then people who are providing those payment gateways are effectively charging a little bit. So everybody needs to effectively make money, but because of this crypto thing, they feel that there's a big opportunity for them to do so. So one is the on ramp that needs to be more cheaper, and then we need to find out the way how off ramps should exist. Because right now, in order to really get the fiat out of my ETH, for example, I either have to send it to Binance, Coinbase, or any of these exchanges, swap them from USDC or swap them for actual fiat, and then transfer into my bank account. So the off ramps does not exist today in any realistic way.
I think the hope is there is no off ramp. You just pay in it in a token. Right, in 5 years, I hope I can use USDC coin at the grocery store or through.
Yeah, I feel the same way with CBDC moving forward. We shouldn't really need off ramps, but I'm talking about today with where it exists and all these efforts that a lot of countries are doing with CBDC.
Hey, Patches, I have a
Either
question for you.
accelerated.
Yes, HBAR Joe, feel free.
Yeah, I have a question for Patches because he probably knows. With Hashpack, you can take your USDC, offload through Banksa to a bank account. I haven't tried it because you can't do it to the US dollar, but I know you can move everything to USDC and offload it. I don't know what the fees are. I know their purchase fees are insane, but I didn't know about the off ramp. But I know you can take it right from Hashpack to a bank account. Do you know more information?
Is that the feature that was announced today?
It's been up. I haven't tried to use it. I just clicked on it, but I know it's. Hold on, let me look at it. It says Australian. Let's see what options it has. But you can go USDC right through Banksa, just like you purchase through Banksa, but you can offload to your bank account. Let's see, buy, sell USDC with Banksa.
But boys, it's very close to what we're saying is I think some of you are preaching something you don't understand the dangers of. We're talking about destroying banks. But many of you forget how integral a banking structure is. Now, you're not saying, "Oh, I want to get rid of the amount of scrutiny and control banks have." People are talking about removing banks or financial institutions altogether, which is a bloodbath. That's anarchism. And I don't think we're even ready for anarchism. Half the things that we utilize today, the only people who were able to group up enough money to kind of fund and get those things going are banks. Like, you need somebody to be able to hold a huge amount of wealth and distribute it, technology that they deem as necessary and profitable. You know, which startup that's done 5x, which of the most successful businesses today do you know that didn't get a loan? It's just not possible. Doesn't sit in the whole.
Well, yeah, but
No,
wait.
Tony, the
Got
argument
loans
is
for their
why can't
factories, you know?
Bank of America be on chain? Why can't Bank of America be on chain?
Fam,
That's
I'm sorry.
Let's
I'm
get
sorry
to.
to inter.
We
I
have
just
like 4 people speaking at the same time. Let's get to Tony. I know DC, you had your hand up after, so I hope you're finished the sentence, Tony. And DC, what's up?
Oh, so I just wanted to interject here and just say, Jack, I do agree with you. I 100% understand what you're trying to say. Why don't banks just come on the blockchain and, release their own shit token? Let's say, let's say the Bank of America. Let's say the Bank of America comes up and, releases their shit token called BOFA. It's in essence, they can't, because that shit token is not going to be backed, unless they have tokens for every one of their assets, every one of their illiquid assets. They cannot account, or they cannot be one-to-one backed. And this is what I mentioned in a space I was in earlier on. I was like, go to a bank. Go to a bank if you have, let's say $10 million in your bank account, and you go and you say, withdraw me my money right now. I'm 100% of the time telling you, they will never give you your amount. And it's not the fact that they don't have it. They may have $10 million in cash reserves at the physical, bank. But it's the fact that, the customer that comes after you, the customer that comes after him, will they be able to, get their amount? And this is what we see. Banks gamble your assets away all the time. It's just the way things are. But they are regulated. So you cannot have, they even if they go bankrupt, they have enough illiquid assets to cover every one of their, potential debtors. And that's the important takeaway from this.
As you talk to Jack, let's get to Jack first, and then you, Patches. Jack.
Thanks. What I'm trying to say is, I never talked about shit token. I did not talk about shit token. I'm saying, what is stopping right now? Obviously, there are much more technological things that needs to be taken care of. And why don't we start building banks on blockchain? What does banks really do? You deposit your money? Forget about shit token. Forget about, let's say, why does a DeFi protocol, which is collecting fees, like, for example, Uniswap. Uniswap having a token does not even make sense at this point. It's a DEX, it's collecting fees on every single transaction that you're doing, until unless that shit token is doing something. That is a different case. A lot of protocols have come up with their own token, and that is their fundraising. Today, if Bank of America announces that I want to come on, let's say, Arbitrum, or let's say Ethereum, what is stopping them transacting? If everybody is on the blockchain, you can get much better rates, you can get much better, everything is clear, everything is transparent. Any securities, any assets that they're having on their books, you can instantly see how solvent the bank is with their treasuries. And you're talking about one-to-one backed assets. All these auditing, the regulation or the auditing is done every quarter for every bank, just to see how many assets, liabilities are there at the end of the day. Now you can clearly see. So why remove that idea? Forget about the tokens, forget about everything, just how the protocols work.
It would be such a huge change, but super interesting to see if this could or would play out. Patches, and then Joey.
Yeah, I guess the one thing, why don't I trust banks? It's because they can freeze your funds in a centralized manner at any moment due to political or governmental needs or their own needs. So we don't like that. I think I would trust a multi-sig DAO wallet that gave out loans in USDC much more than a bank. And I think those are going to be solutions that are going to exist for a while in DeFi. And the overarching solution that we're building here should allow the financial freedom of anyone to kind of transact in any way that they want, in an anonymous way that they want. And the transactions aren't always fiat. Like, it's not this entire network is about global information sharing in a way that has your privacy and data and anonymity tied to you and your wallet, and you decide what you share about yourself. And so just like the fundamental architecture of what we're building is the antithesis of a bank, which they need to know everything. They need to centralize all funds and have dictation over the value you've earned in whatever job, and they can remove it at any moment, which is dangerous, as we've already seen in the world. So I guess that's like the overarching thing. And then the last I would touch on is I don't trust people that were born before the chocolate chip cookie was invented, which just happened in re-election in the U.S. Senate to dictate what happens in crypto. And we've already seen the criminalization of tornado cash, a completely normal thing that you just want to be anonymous in this place, and it's been criminalized because bad actors can use it to be anonymous. Well, like, if we just like criminalize everything because bad actors are doing it, then we're going to lose all of DeFi because that's a way to move funds around. And so the lens that governmental regulation has had so far has not been in support of the technology or understanding, in the very least, of what we're doing. It's been seeing bad things happen and then trying to put band-aids on bullet wounds that are nonsensical. It's not even a band-aid. It's just like a Lego. It's like that doesn't do anything. It's just it's a completely non-understanding of the technology and the innovation that's happening. And then they just see ramifications and they ineptly try to solve. And so from regulations, I'm just very, very scared as a US citizen, because it continually is just putting us in a corner where the purpose of this technology is getting lost, and the trying to help people be safe is just so off point that all regulation is just it's tone deaf. And we just need people who know what they're talking about, not SBF helping decide what is in a bill.
Amazing matches. Joey.
So I didn't come here to talk about Hedera, but there are 3 banks on the governing council there. So I don't think banks joining on the blockchain is super far off. But like to what Patches said, in the U.S., regulations scared me way before I was in crypto, and regulations scared me when I was in banking. But it still comes back to, how is it going to be controlled to the point where it's got global trust and it's an easy on-ramp so that my parents can go buy some crypto without having to write down 24-word keys and call me 4 times a day to figure out how to move anything around or take access to what they have. And that's kind of where it's going. So I think there's going to be a big change in balance. And of course, the U.S. government's going to put their hands in everything that they possibly can to try to, quote, keep it safe for American consumers. So we'll see.
I would just want to be a fly on the wall when the banks are discussing crypto in their big meetings. With great things being addressed tonight. Thank you. Joey, what's up? I think Tony was right. Tony and then Hudson.
Yeah, like what? So Jack saying, why can't banks build on crypto? We don't have the framework. If you just think of the points or the data points that a bank uses to, one, ascertain what their true value is, ascertain what they can borrow out, to measure other institutions where they're borrowing from each other. Bank to bank borrowing is a real thing. And then when you count into things like the mortgages that they have on deck, the bonds that they're holding, crypto doesn't have. We don't have which devs are going to be able to put all that data together. We don't even have the AI inbuilt into smart contracts that can start piecing that technology together. In banking institutions now, most of that information is now being done by AI. How do we plug the AI into a smart contract and start educating it to read those contracts and to react at certain thresholds? So like you said,
We're getting information that AI. Where are you getting the information that AI is controlling?
Where my information that AI is controlling what's going on? Because you can get a loan online today without somebody saying you're a good man and you're a bad man. and that loan is
Those are
being
just
generated by
scripted parameters, Tony. Those are just
exactly,
scripted parameters.
exactly. It's scripted parameters, but it's
So
also
what I'm
learning.
saying is,
It's
Tony,
not
But
AI.
I'm not finished. Wait, let me
Can I?
finish it. Let me
Oh,
finish it.
sorry. Go
So
ahead.
so all of a sudden, yeah, all of these things have to be put on chain. All of these things have to be migrated on chain for that to even be viable, for you to even be able to say the Bank of America is now on chain and it's functioning as a bank.
You could have a
But
secure bank
you know,
oracle that you wouldn't have to put it on chain.
I agree. And to the point, what Tony is saying, that we don't have the infrastructure. See, we're at the start of the internet, and look at how many neobanks have come up. We have Revolut. We even have Apple Bank in in play. We have Monzo. In the UK, we have 6 different banks. In Europe, we have 12 different banks who have come up, who don't have any branches whatsoever, and they're acting like a bank. In fact, you're doing exactly the same thing as you were doing in the bank on chain. When you take a loan from Sharky.fi against your NFT, that is like taking a loan where you're using this infrastructure at this very moment in a small scale. And as far as AI is concerned, AI is all over different blockchains. It doesn't data exists, everything exists, and you can implement whatever you want to do today as far as AI in the traditional world as you're doing it here. So yes, some of things are missing, but it does not mean 5 years from now a Bank of America cannot be on chain.
Just to interject here, Jack, I'm sorry, I'm gonna be very blunt. Taking a loan from Sharkify is not the same as taking a loan from the bank. In the bank, you offer your house, any assets you have as collateral when you're taking out a loan, and there are processes there.
Let's
Taking
leave that.
out a
Let's talk about balance. Let's talk about Aave. You're taking
No,
collateralized
but
loans,
that's
right?
the regulation process. That's how the bank. You're liable to the bank, and the bank is liable to you.
I
Yeah,
would.
it's controlled by a code. If I'm not able to pay instantly, my asset will be liquidated. It
I would
is
put.
much
no,
better
but
than the traditional world because
but
it's
you're
over
also not.
collateralized.
But then you're also not varying in that. So the smart contract also has to know things like the value of your house, the price changes of the house. It has to know things such as there's so much that goes
We
behind it. So the
track
bank,
that, Tony. We track that currently. Those are things that are operational in play.
With
When you
Chainlink,
interact with Creditum on Phantom blockchain, what are they doing? The price changes are instantly. They're tracking on-chain pricing every 2 seconds.
So I guess, Tony, I want to know from you, like you're talking about the technologies not being in place, but don't you think this is something that's coming, something we could do?
like, can we do it for 100,000 people? This whole process to get all their houses online, to get all their businesses on chain and their houses on chain, and to give them a viable working bank for 100,000 people, maybe. But when we're talking about the global banking system where there's a transaction every millisecond, like MasterCard's doing like 4 million transactions a minute or something crazy like that. Like, which chain? Which chain is going to be able to handle that's like 4 million
yeah,
transactions a second. And that's not even us sweeping Magic Eden on top of that, like this
Mastercard
is
processes around 4 to 5,000 transactions per second. Solana can process close to about 60,000 transactions per second.
no way.
We can process the transactions and all that, but we don't have all of the infrastructure. There's a lot of places working on all the individual pieces that will eventually build up to that being possible, but we don't even have clear regulation on what they're even allowed to use if they were on the blockchain, if they could even use USDC or any other stable coin or anything at all. They don't have any clear regulation on whether or not they're even allowed to do that yet. So for them to even consider being on the blockchain is not feasible until they get some sort of legitimate clarity.
I totally agree. I'm just last point I would try to make is, which is this thing. Sorry, Patches. Just last point. I'm not arguing Bank of America is ready to come onto blockchain tomorrow. I'm not. I'm saying smart people, including me, including us, are building systems to make this possible in the next 5 years.
Let's get to Patches.
Yeah, I was gonna say it feels like we're like looking ahead 3 years and saying it's impossible. It's just a lot of work, and it's definitely like Hedera transactions it's throttled down to 10,000 transactions per second, can go up to 100,000 without any change. Then you introduce sharding, and you have a theoretical infinite scale. So there are networks that are building, that have this ability to take large scale enterprise, huge transactions per second and execute. And the last thing is like I don't really know if I want banks on chain. Like, sure, that's where the real estate and everything exists today, but I have a mobile bank that is an internet startup that I use daily for my main finances. It's FDIC insured, but it's not one of the main giant banks, and there's no reason why a new industry such as crypto won't have their own players that create DAOified funds that they loan out for essentially one to one, acting like a bank, but in the ecosystem and understanding from the ground up how the network works and replacing where you get your mortgage from a much more stable, decentralized entity. I guess like we can work towards getting banks on chain. That's great, but why? It's like maybe we just make our own banks and do what we want with trustless smart contracts, proof of reserves. Like everything of which the financial institutions are failing us on. And again, like talking about traditional loans, I'd point to 2008. It's not like they're an NFT has the same value as a 2008 mortgage. Like they play the same game and they put value in things they know are valueless to sell to someone else and make money. So it's like it's not that they're just completely innocent and there's always equity and value behind investments, and they do play with people's money that they put in the bank. So I would much rather have a trustless, clean, Web3 first institution holding my money instead of a bank coming into Web3.
Super interesting, guys. Looks like I wanted to get back to Hatsu, but I think he went down, right? Yeah. A lot of thank you guys. A lot of good stuff being addressed, and this is really needed right now. This is really, really, really the time for all of these wonderful builders and all of us to get together and really solve everything happening right now and create this trust in this space again. Anything last? We went for what 40 minutes longer than we intended, but this is I'm very happy for that because this is needed. Any last hope? Anyone want to share?
I just thank you for letting me speak so much, and honestly, just having a forum. Like I like the sharing of ideas and having disagreements colloquially and respectfully. And I think that's how we grow this space. Because like I'm gonna have a completely different perspective than someone else, and maybe at the end of the conversation, I'm gonna research something else, or even if not, people listening can hear these different perspectives. So I'm always here for disagreement, and just continually growing our understanding of what we want this to build together. In the next couple of years. So thank you so much for the forum.
Oh, just to also add to that, I am immensely thankful for any sort of platform that I end up speaking on, because you guys not only provide a voice for different kinds of opinions to shape and form, but you also you give people the right to know, and that's very important in this day of age, in this day and age, and especially with the current market sentiment. It's important for people to know there's harmony in the space. There's while there are dialogues and there's tension, it can be easily resolved. And calls for decentralization, centralization, they don't really matter when all you're at the end of the day talking about is crypto. And mass adoption is essentially gonna get us there. And thank you for letting me come up and speak. And I hope to be a regular part of these spaces. Thank you.
Thank you so much for coming on. Yeah, we started this as a way for platform and for projects to speak about what they do. But this is really the time to just get together, have these discussions, and think together like how to get out of this turmoil. Tony, do you want to touch back on what you said earlier?
Yeah, man, I ranked hard. Well, I stopped hearing. But, I was just trying to see, because I think when we're looking at like the banking system, what you guys are doing is you're taking the technology that the banks have, and what you're doing is you're actually removing the very intelligent people in the banking industry. So yes, you're going into a bank, and yes, you're sitting there and talking to a bank manager and saying, hey, this is the business I want to set up. I think this is my turnover. I think this is what my net profit's going to be. And then that business manager is processing the information, and they're giving a recommendation on whether to accept, approve, or disapprove. The underwriter is making the recommendation saying, yeah, you can get this loan, or no, they can't get this loan. And some of the most some of the most interesting ones, you might make contact with Virgin Money or something and say, hey, I want to get 6 or 7 buy-to-lets, but I want my mortgage to come out as one lump sum rather than come out in 6 different mortgages, just so it looks better on the credit file. And they might negotiate with you on how that's going to look, and they might say, actually, we're going to give it to you in 2 marks, and you can put up 2 deposits, but all those houses will be registered separately, blah, blah, blah. So all of that aspect, you're removing the humans in the process. You're just seeing the numbers and the tech. You're disregarding that there is a human who's actually playing a role in all these affairs, you know? And that's what I'm most interested in. We don't have the human on chain. There has to be a human who's interacting or something that replaces the intelligence of a human. And right now, we don't have any bots that can replace the intelligence of a human. We don't have any.
Just to chime in here a little bit. I 100% agree with Tony. Banks do require a certain level of face-to-face transactions, and that's essentially what stocks are based around as well. They're face-to-face transactions, so you need a human in there at the end of the day. And to be honest, with the recent FTX debacle, it's important to note that Alameda was a quantitative trading agency, and the reason why they lost a majority of their funds, of their clients' funds, was because quantitative trading firms are run by AI. And while AIs make the most rational decisions, it's not always the best for a consumer or a client who is not who did not sign up for his assets to essentially be used this way. So yes, 100% more regulation is required. I agree with Tony.
I guess the future will tell. You guys are talking about a lot of the structures that's not in place today. I want to get to Jack.
So to that regard, I would only say one thing. Tony, here's a very interesting statistic. 60% of Africa is unbanked. They don't have a banking account. Right now, they're dealing with the numbers. M-Pesa is one of the companies where you use your people through mobile phones. Mobile phones have effectively become banks. They don't control their assets. They don't control anything. And how many people have been denied loans because they look different or they don't look? The human element comes with a whole lot of bias. For the first time in the world, in the human life that we have, the opportunity that we have is that now you can permissionlessly transact on the blockchain and do whatever you want to do. And that is the future. Where is the bright future? Look at us. We're a bunch of pictures with different ethnicities, different colors, different countries, different cities. And now everybody is playing on the level playing field. And that is the world that makes us move forward. So if you are craving for that human intervention, don't worry. We can have people who are helping you make decisions on the blockchain, a human element. But our technology today and in the future will solve a whole lot of problems. And I'm all for it.
I'm not gonna pick a side on this, but just hearing like that side of it, Jack, is super intriguing, and I think a lot of people in crypto and DeFi can agree with that. Patches, what's up?
Just a quick retort. First, the human element isn't always great. Bankers led an insane amount of people into debt in 2008. They specifically targeted minorities and non-English speakers in an illegal fashion, illegally sold them mortgages for personal profit from closed mortgage incentives. And so the personal element isn't always great. Sometimes it causes an entire collapse of the financial system because the incentives are out of sync. And then the second would be, you can create a Clippy type figure loaded with data from the blockchain, updated through process, simplistic UX going step by step on information that is integral to that person's knowledge. You wouldn't need the human element to easily display information that they would need to best suit their needs for that loan or collateral. And through a very easy to understand process. It's all about the user experience though. If you just throw all the numbers at them, it's impossible. But if you slowly walk them through, which you can do again, like Ally Banking, you can do a loan through a step-by-step process without talking to anyone. And it finally and easily gives you resources through each step. So I just kind of, I guess, don't agree with the sentiment that a human's better. And I do think that just through simple understanding of design and information and cognitive load, we can build really good on ramps that have people prepared to make their own decisions financially.
Let's see, Future, what's up?
I just wanted to chime in and say, you know, since we're signing off, everything about these times, these troubling times, everything about it isn't from a negative perspective. Don't look at it as all bad news. Right now, the market is down. There's fear everywhere. That means that there's a ton of great entry points. These are typically where the wealthier up at the top, when we're peaking out and we're having big pumps, that this is where they enter. A lot of people buying into fear. So do your research. You know, there's plenty of time. The market's not going to shoot up tomorrow, but who knows? It could do that. But yeah, these are great times to make your entry. You know, even if you're just like me, I don't have a ton of money to spend, so one Solana or $40 worth of Ethereum here and there. You know, every few days, even every paycheck, it doesn't matter. You know, it slowly accumulate what you feel confident in, and you know, stay safe out there. Get it off exchanges.
Some hope. Some hope. Thank you, Future. What's up, Tony? You want to touch back on the banking, on the people?
Yeah, so like it's easy to feel human greed is not bad. Human greed is not bad. We have everything we have today because human greed exists. It's just the need to be better, the need to be faster, the need to have more than the past. This is what it is. So what we're truly talking about is capitalism and how it drives towards the flourishing of economies. People saying, okay, there's discrimination, the bank manager won't give you a loan because of this. They were targeting ethnic minorities specifically because they were easier targets. All that is a narrative and it's a part of human greed. Now, when you say
So
that,
remove
you
it
also
with smart contracts.
no, but when you say that, you also overlook the victorious stories that come from human greed. So Jack mentioned M-Pesa, which is run, I think it's run by some South African guys who started this mobile transfer idea, and it's really caught a hold in Africa, Asia, Latin America, just mobile transfer technology. And here in Europe, it's recently become like normal. I'm talking 2012, you started being able to do from your app to transfer money to somebody else. Whereas in Africa, that was around from 2008. So the point I'm trying to get at is that project managed to get themselves established in Africa because they saw a window, they saw a gap of opportunity and said, hey, these guys are unbanked. Why don't we turn their phones into banking systems? And that's where the catalyst then comes up, and then these countries say, hey, we need to do something very similar. So it's weird to say that human greed is bad or discrimination is going to be always a hindrance. I don't believe that it plays as much as great a narrative as people assume it, and to confuse discrimination with bias is it's a very contentious line, you know, because yes, people have certain biases and yes, people trust certain things, but I think when somebody comes up and offers a viable business system to a bank, they are most likely going to get the loan. And when somebody comes up and offers an
But
unviable,
statistically, you can look at statistics and see it's not true. I mean, you can look at two people in America, one black, one white. They go to the same appraisal, and the white people get 100,000 more for what their house is worth. So it's like you can easily see data points on how discrimination through banking happens every day.
but these are very,
it's like
very
anecdotal versus data.
But the thing is, they're getting 100,000 more because first of all, you're dismissing that the average loan given out to a certain minority might not be as high as another minority. So the numbers are already
Right.
indicating that,
So discrimination.
you know, so no, it's not discrimination. It's, you know, it's like you're looking at it. If you're in economic school and they're telling you on average this group earns much, and on average this group earns that much.
What I'm
You know,
saying is, in a specific use case, they took one house and it was the same exact house, and nothing changed. They only changed the ethnicity of the people asking for the loan, and in that two different appraisals, it was $100,000 delta. And that is a data point in statistical data we see. And like, I mean, now we're pulling the thread to like, you know, infrastructure and how, you know, there's just really baked in racial disparities in the entire banking system through redlining and just everything. So this is going to become a huge conversation. My only point was I don't trust people, and I would like a system in which I get my money from to be completely trustless and verifiable. So it doesn't matter if someone's greedy or not. It just happens every time as I expect as a user.
Okay, I'll keep it on chain. you can manipulate the outcomes that AI gives you. By the way, you can
Not
manipulate
a smart
it.
contract. And you say AI, but it's like an
It
Experian test. Like
depends
getting
if you.
approved for a loan. Getting approved for a loan, I wrote banking software. It's an Experian test based off 12 different data points on your background, and it's not AI. It's an algorithm. So it's just like it's an equation. An AI interacts differently than an algorithm, and you can definitely put an algorithm into a smart contract. Sorry, I apologize for cutting you off, Tony.
No, my signal's playing up. My signal's playing up. Let me see if I've caught up yet.
No, it's super interesting. It's super interesting. I could go for another hour. We won't. Let's see if Tony want to touch back on that. Otherwise, we'll wrap up. I think just in general, like what Jack and Patches are talking about, especially in a financial sense, just every human's equal opportunity is such an interesting thing, and what blockchain enables in that sense, super exciting. Tony, do you want to touch back on that? Or DeFi? See, two sides of the coin, but good discussions. If not, we're gonna wrap it up. Patches, what's up?
Yeah, I just say like I really appreciate the conversation, and again, like differing viewpoints are important for the space to grow. So I really appreciate. It's not easy to have an opposing viewpoint on a panel, especially in spaces. So I really appreciate you, Tony.
This is like, that's the thing a lot of people always mistake. Like this is it's stimulating to have positive conversations, because then you start moving forward slowly, and it improves both parties equally. I see the conviction in getting everything on chain, but I've also see the need for bricks and mortar. I also see the need to keep human involvement in a lot of aspects. Simply, I just and then the other part of it, do I really want Web3 to become a workplace? That's the real fear. Do you want Web3 to become a workplace? Do you want like, what is it? What's our boy? So Zuckerberg, he was saying, oh, you can work in the metaverse. It's like, no. That's not what I thought the metaverse was going to be. It wasn't going to be a workplace. It wasn't going to be this serious, suited and tied and booted environment. The metaverse is meant to be a place for escapism, not a place for reality. That's the only negative I see by bringing these banks on chain. Because as soon as we saw them entering and start to play around in this ecosystem, things started getting really serious. Then the laws want to come in, the government wants to interfere. We have to kind of keep them on the sidelines. If we are going to build a financial system that rivals the bank can't unpin it, because they'll cheat us eventually. If we allow them to come in and help us build this house, they're going to own a part of this house, and they will control this house to a certain extent. What we want them to do is to keep doing what they're doing until it's outdated and redundant. Then they will start confirming and saying, okay, nobody's using banks anymore. What do? We have to close them down. Where do we enter? We have to enter this Web3 as equals. If you let them in now, they're entering with a huge advantage, because they have an unlimited amount of money to come in. Somebody said they can't set up a stable coin. They can set up a stable coin with the deepest pool you've ever seen tomorrow. We don't want that reality. If Bank of America set up a stable coin tomorrow, it would have the deepest pool we've ever seen. And it would just kill everything. It would kill Tether, it would kill USDC, it would kill DAI, it would kill everything. We don't want them to enter on this level. We want them to enter when we've established the parameters. We've established what's good and what's bad. Not them, because they're just going to bring over their overheads, and they're going to bring over their pals, and they're going to celebrate before we even get, a bite at the table.
It's what we do. Let's build the house ourselves. What do you think of that, Tony?
I gotta
That's why I was
run
bullish,
here. I gotta run here, but thank you guys, thank you Adam, and thank you Zims for having me up, and thank you Patches, Jack, Tony, Bard, John, Joe, Peter, Future, everyone in the audience here tonight. I am thankful you guys are here, and honestly, it's very nice to see such insightful and such honestly such smart people in the space, and it's always refreshing to have a nice conversation with people, and why you may disagree or agree. at the end, like I said, it is crypto, and we are all, united behind this common cause. So thank you for having me up. I am gonna have to run. It's been an amazing space, and thank you for having me, guys.
Thank you so much for coming on, DC. Yeah, I think this is the perfect time to wrap it up.
I agree. It's right at that 2-hour mark.
Yes.
So
Yes, we have touched on a lot of important stuff today, and I think, yeah, I'm so hopeful, and just hearing all of you guys, smart people, coming up here to speak and sharing your thoughts, getting some discussions, learning from each other, and I hope, hopefully, I'm sure we'll be able to restore this trust in this ecosystem and everything that's being built. As we said in the beginning, it's no longer a space for profits. This is the time to build trust, and profits will take when we come out of that. Once we get out of this, this is now war. I will try to address it one by one until we're clean and ready for set up for the next bull run. For now, get self-custody over your funds. Make sure you get a ledger or wherever you can get self-custody and own that. Don't keep it on the exchanges, especially the ones we talked about today. Tomorrow, we're going to have a project called Big Head Billionaires with us, but we're going to keep talking some market talk as well. Hopefully nothing crazy happens until tomorrow, but who knows? Either way, we're going to address it. Thanks everyone so much for coming on.
Thank you.
Thank you, Joey. Thank you, Jack. Tony.
Great to listen to.
Make sure you follow these smart people on stage who's taking the time to come discuss this with us. And if
Except
you like
for
to listen
TK.
to us, except for TK, yes. If you like to listen to us, no, I'm kidding. Follow TK as well. What the heck? He needs to get to 2,000. Follow the pod if you like to listen to us speak and discuss and want to come on another time. We're also sponsored by Hyperlaunch, which is actually Jack's building, which is making a permissionless launchpad where anyone can launch their NFT collection without writing a single line of code. And just like we talked about, it doesn't matter what skin color you have, where you're from, or your net worth, you can go in there and launch it and make it very professional for your brand. Check it out. Until next time, guys, have a great rest of your day. And I'm going to leave you with the wording that I have a real good feeling about what's to come in this space.
See you tomorrow, guys.